morning. Welcome to IG's Early Morning Call. It is a leap year this year, and today is the 29th of February. So we get an extra day today to pack in another day's trading, which would otherwise not be the case in a normal year. Let's see what the headlines are as we start out on this Thursday, the 29th of Feb. We begin with what's happening on the foreign exchange markets. A surprise move up for the Japanese yen after a board member of the Bank of Japan calls for the end of the ultra-loose policy that's been in the markets for some years. Meanwhile, earnings out today. A number of companies in the European markets to watch out for this morning. For us, the headline is going to be Ocado, full year figures. It's a 53-week year, but the company's done some adjustments to make sure that we got some good comparisons. And the loss has narrowed to £403 million at the EBITDA level. The company has returned to profit. And as we look ahead to the US earnings out today, we're looking back to what happened last night for Hewlett-Packard. The company down 3.8% on some poor PC sales. Meanwhile, the chief executive of Snowflake has retired. As a result, the stock was down after a 20% loss in extended trade last night. Let's take a look at volatility. Up yesterday, which is where we're holding at the moment. I'm beginning to wonder whether perhaps maybe this is a bottoming out that we've got. This is a slightly higher high, and we've got more higher highs coming through here. So let's draw a line there just to witness what's going on. And in an effort just to show you this bottoming out that we've got here, forgive that little blip, that's the move that we've got. I think this move that we've got, this bottoming out in the market, I'd want to see a new higher high before I call an end to the bottom that we've had. But the problem is with that, on that day back on the 13th of February, we got some wild volatility. That was all about US interest rates, I think. And it's going to take some time before we get up to 17. But at 14.67, things are beginning to look like they're improving, albeit little by little, in terms of volatility. Now, this means that risk assets are off the boil. And in fact, that's exactly what happened yesterday on the London market. It's a big red candle in yesterday's session, more concerns about the outlook for some companies. We are up on the session in today's trade. And in fact, if you look at the 30-minute candle chart, I think you can look to see where we were at the close last night. You can see we're expected to open with a positive swing to the markets at the top of the hour. And it's not just the London market, so we're seeing some gains. More record highs on the German DAX in today's intraday session, 17,634, 24-hour market showing a new all-time record high for the German DAX, looking to open stronger there on the German markets. Same sort of price action in France, not quite at the record highs that we saw back on the 23rd of February, but if we close at these levels, it'll be the highest close you've ever seen in the cash session. But looking good for the start of today's trade, pretty much across the European markets. Let's remind ourselves of what happened overnight in the Asia-Pacific markets. Pretty much every market was on the way up, apart from the Nikkei 225, which closed with a loss of just over 1/10 of 1%. We've seen a slightly stronger Japanese yen, which we'll take a look at in just a few moments' time. A Hang Seng Stock Index, S&P ASX 200, the Nifty 50, the Singapore Straits Times, pretty much every single other market on the way up in today's session, which I think gives me a little bit of extra hope for the start of trade on the London markets. But it wasn't all plain sailing yesterday on Wall Street. Let's take a look at what happened as at the close last night. Because the Dow, the S&P, the Nasdaq, all down on the session in yesterday's trade. And those tech stocks were exacerbated by a big drop in Snowflake late last night, and also a drop in Hewlett-Packard. Let me just take a look at what's been happening on the 24-hour markets on the Nasdaq, the US Tech 100. You can see here, if you look at this, second down a row of losses that we got at 17,868, away from that recent record high that we had at the back end of last week. S&P 500, same sort of price action, coming off the boil just a little bit. But at the moment, I'm not too fast. This is just a retracement in what is otherwise a market that continues to score more record highs. Dow, again, a little bit further on, away from the highs that we saw at the back end of last week. In fact, yesterday's candle was really interesting because the market saw some relatively hefty losses at one point, and then came the clawback. And in fact, the 24-hour markets, we ended up on the Dow Jones Industrial Average. But let's take a look now in some more detail, though, at what's been happening in Japan, because I think the Japanese yen is one of the interesting stories overnight on the markets with some strengthening. We've seen some interesting data out overnight. Industrial production in Japan falling at its fastest rate since May 2020, down 7.5% in January, month on month, with output sliding in 14 of the 15 industries surveyed by the Ministry of Economy, Trade and Industry. Production declined by the widest margin in motor vehicles, down 17.8%. We've seen in a long while. A major blow for the Japanese economy as automobile-related production had remained strong during a period of weak global demand for goods. Retail sales rising there for a 23rd straight month in January by 2.3% year on year, matching the median forecast, which just goes to underpin the fact that we've got the consumers which are behaving relatively healthily in what is otherwise a market showing some industrial weakness. Let's take a look at the Japanese yen and what's happening here. Rising overnight on the comment from one BOJ board member, Hijami Takata, the central bank member, said it must consider overhauling its ultra-loose monetary policy, including an exit from negative interest rates and beyond yield control. Look at this big move on the way down today. This is the dollar falling against a stronger yen, down below 150, which I think is relatively significant. It's a big round number. It's certainly the number that we've been hitched in on. You can see this red line here, the 150, where we've seen a lot of the closing markets hover around. So I think there's a relative significance to this. Just a question of whether or not this is going to be followed through with the Bank of Japan taking the action that some are now believing will come in April this year. That's the move we've seen in the euro against the Japanese yen, sterling yen, Aussie yen, Canadian yen, you name it, all down against the Japanese currency on hopes that the Japanese will exit the picture for negative interest rates sometime soon. We've seen some economic data out in Australia as well. Retail sales rising by 1.1% in January, month on month, after a 2.1% fall in December. Economists had anticipated a 1.5% increase. So despite the fact that it's looking healthy, in fact, it's not as strong as some had been expecting within the Australian economy. For economists, the underlying trend in retail sales remains weak. The main reason financial markets are confident the RBA rates have reached their peak. Meanwhile, I just want to quickly update you as well on what's been happening in UK car production, jumping 21% in January, marking the 5th straight month of growth for this particular sector here in the UK, helped by firm demand and easing supply chain issues. The bulk of production was for export. Interestingly, electric vehicle output rose 4.5% last month, accounting for 35.7% of overall production. Quick update on what we've got in terms of the German economy. Retail sales out this morning. We've seen retail sales falling by 0.4% in January, month on month. The estimates have been for a 0.5% drop. Unemployment rate expected to remain at 5.8%. This is out a little bit later on this morning. And later on still, 1 o'clock this afternoon UK time, consumer prices in Germany expected to increase by 2.6% in February year on year after a 2.9% rise in January. Over in the US, later on today, we got core PCE, which is an interesting headed to watch, expected to rise by 2.8% in January year on year after a 2.9% rise in the prior month. Keep an eye though on the month on month data, as it's expected to rise by 0.4 after a 0.2% gain in December. If this does take up, there may be some concerns about the outlook for the interest rate cut from the Fed come the meeting in June. Euro dollar, third day in a row, losses for the euro against that slightly stronger US dollar. Meanwhile, in Canada, markets expecting the growth data for the fourth quarter. The Canadian economy is forecast to expand by 0.3% in the October-December quarter after a 0.3% contraction in the prior 3 months. Now, let's move on to take a look at some of the corporate news headlines we've got, because there's some interesting data coming through. I wanted to lead with Ocado. Full year numbers for the 53 weeks through to the 3rd of December 2023. The comparative period was adjusted to help with those comparisons. So, group revenue up 9.9% to £2.82 billion. Tech solutions up 44%. Ocado logistics up 1%. Ocado retail up 7%. Group adjusted EBITDA 54.2 million. Now, this is up 125 million from a loss last year of 74.1 million. But the word from the company is that these numbers are better than internal guidance the business had been looking for. Let's take a look at the share price. Earlier this week, Ocado shares fell after Marks and Spencer said it's withholding a multi-million-pound payment to Ocado Group after its grocery delivery type failed to meet the key performance targets. M&S and Ocado partnered in 2019 to create Ocado Retail, a £750 million venture that gave Ocado customers access to M&S food. So things are looking particularly good. These numbers out this morning are better, I think, than some people had been speaking about. Yesterday, we saw the lowest level we've seen in Ocado stock, not seen in this market since the 1st of November 2023. So we're knocking on the door there now. Something like around about a 4 or 5 month low for Ocado, 4-month low for Ocado shares. Looking for that stock at the start of today's trade. Now, the spin-off from GSK a couple of years ago, the health Haleon has been doing brisk business since its independence from GSK. GSK is still a big shareholder in the business. Full earnings out this morning, revenue increasing by 4.1%, organic growth up 8%, adjusted operating profit increasing 10.4%, operating profit margin up 50 basis points to 22.6%, total dividend coming through up 6 to 6 pence. The proposed dividend payout of 35% of cash available is up from 30% last year. So you get the idea that this stock is doing well. It's got a lot of cash coming onto the balance sheet. Despite that, yesterday was a particularly poor day ahead of these earnings out this morning. We had the lowest touch in the share price seen since the 26th of January. I like the look and shape of these numbers out this morning from Haleon. If you're long on this at 313, your stop goes below this area down here to around about the 308 pence level, 313. Interesting to see what happens with that stock at the beginning of today's session. IAG coming out with numbers today. This is the company that owns British Airways and Iberia. Net income 2.65 billion, operating profit in line with expectations at 3.5 billion. The company total revenue for the company 29.45 billion. Interestingly, if you cut it down into quarters, the fourth quarter adjusted operating profit coming through at 502 million. Bloomberg said they were expecting 504 million. Depending on what the share price is priced in at, whether it's priced to perfection, we're interested to see what happens in the stock. Look at this, what happened yesterday. Big, strong candle on the way down yesterday. That was a 2% loss in the market. Interesting to see what happens to that stock at the beginning of today's session. I want to stay on the charts. Just want to quickly update you as well on this business. Anheuser-Busch yesterday down for a third day in a row. This is the world's biggest brewer, posting better than forecast sales in the fourth quarter, up 6.2%, and it's raised its annual dividend as well by 9%. If you're long at 116.830, which is where this stock opens on the Dutch markets this morning, stock goes below recent price action, with the video taking that higher as well. Stock on the way down late last night was Hewlett-Packard. Shares fell 3.8% actually in extended trade on the IG platform after missing revenue expectations. Here are the numbers. Earnings per share, 81 cents. That was in line. The revenue reaching 13.2 billion, falling for a seventh straight month, and missing forecasts of 13.57 billion. Demand for personal computers remains sluggish, according to the company, and this was seen in the numbers last night. HP has forecast second quarter adjusted profit per share between 76 and 86 cents, midpoint of which is in line with the estimates of 81 cents we'd seen previously. Look at what happened to the share price yesterday. But in fact, the glass half full merchants will say, well, look, it was well off the lows as at the close last night, which is true. But I think we're looking at losses when trade gets underway on the cash session a little bit later on today. Watch out for Snowflake shares in today's session. Earnings there coming through at 35 cents. Expectations have been 18 cents. That looks good. Revenue above expectations as well at 774, beating analyst estimates. First quarter revenue forecast below expectations, though. Look at what happened. And well, I'm not going to be able to show you and demonstrate, but let me just explain what's gone on. This is Snowflake shares yesterday at the close at $229.92. But look at this massive, great big loss that we saw in extended trade. It's not demonstrated here on this particular chart, but we are looking for a lower start today. A couple of things happening. First of all, we had the outlook disappointing investors, but that wasn't the whole story. The other story was that Frank Slootman, the founder, or the company that took it through to IPO, I should say, has stepped down, or rather he is stepping down when they find a replacement. He's going into retirement. The 65-year-old has said that there's better people to take over from him coming through in the ranks. They're looking for the right person, and his announcement last night coincided with this 20% slump in shares for snowflake, but obviously it was the outlook as well as much as anything. A couple of quarterly reports to watch out for on the menu in the US. Best Buy, before the market opens, earnings per share $2.52 and revenues of $14.5 billion. Dell Tech coming out after the bell tonight. Expectations are for earnings per share $1.73 and revenues at $22.16 billion. So that's a couple of companies worth watching today on the markets. Let's get back to the charts. Just want to show you what's happening with the price of oil. It's up today. We've been bumping just underneath recent highs. Yesterday, in fact, we saw an intraday high that we'd not seen in this market since that big shooting star candle back in November last year. Yesterday afternoon, the IEA weekly inventories confirmed what the API announced the previous day, a rise of crude oil stocks and a drop in products. Crude oil inventories rising for a fifth consecutive week, increasing by a margin of 4.2 million barrels. Let me just quickly wind in a couple of other charts. Spot gold. Look at this. We're breathing new air above the 61.8% retracement of this little move that we got here. Not quite as high as we have been in the last couple of days intraday, but if we close at these levels, it'll be the highest close that we've seen in this market since the 5th of February. So the last couple of weeks have been particularly healthy for gold. We're currently trading at 2037, beating this 61.8%, and the candle closed beyond that yesterday was significant. Technically, the next line of resistance would be 2046, the 76.4%, then back at levels not seen since the 2nd of February. One final chart. We've got to talk about this. As we always say when we talk about Bitcoin, there are proxies in the market to trade, such as Coinbase, such as other businesses that are aligned to what's going on in the crypto space. Yesterday, big help day on the way up. This price of Bitcoin from the lows that we had back on the 18th of November 2022 is up 313%. We got that halving of Bitcoin coming up. That's always an interesting point, and a lot of people making money on the upside at the moment. That's it from me. Back at 10:30 with Charting the Markets. Do watch out for Haleon and Ocado at the start of today's trade as we continue to monitor the earnings we're getting through fully some of these companies interested in the UK market. As I say, back at 10:30.